Good evening, everyone, and welcome to Crypto Pulse Weekly, our weekly assessment and digest of the markets and an outlook of the near future. Thank you once again for joining and welcome for this episode of Crypto Pulse Weekly. This week, as usual, we'll be addressing the matters arising on the markets. I actually would like to also give an insight to people who are worried as to the recent decline again in the price of Bitcoin and cryptos generally. So without wasting much time, let's get started. The first thing I wanted to point out today is the fact that we sort of broke down on the higher structure, which I'll show when we get to the chart. So before now, we were lining up as if the price was going to hit 50K or at least 49K. But that broke down at 40, I think it broke down at 48. And we had another impulse, was that yesterday or the day before yesterday? We broke down at 43 as well. So now this makes it a further downside possible. And I think 36,000 plus will be the bottom, the next bottom. Many analysts think because of the liquidity pool sitting at 37,500, that will be the bottom. He said that we don't get, I think he said that we stay at 38K or we get to 36,000 or 35,900. And that's basically purely off the technicals. But because there was not enough strength and buying pressure to push the price beyond 48K, the price has capitulated since then, and we've been seeing that downward trend. Also today, I'm going to touch on a very important component of the market that many of us are not aware of. I'm going to touch on what is making the price of Bitcoin and cryptos generally behave the way it is, among other things, and an important correlation that we might have forgotten. So let's get started as we go on. So as I said, 36K is possible because we couldn't break 48K bullish structure until 36K holds and recovers. The market is likely to be sideways or downward. Secondly, the sentiment is down generally, so everybody's bearish, but the price has been holding up well. So by my assessment, I think we'll stay within the range of 35 or 45 actually, if we don't break back up as high as 48K in the next few weeks. That's likely to be the case. And one of the key reasons, just to mention on the side, is the fact that there was Fed's meeting this week, and the Fed reiterated their intention to increase interest rates by 50 basis points. That's 0.5%, which is a lot within 1 year. So that means they will have done 0.25, then 0.5, and people are still saying there are still more coming. So if they do 0.5 now, who says they can't do 1%? And one of the reasons why they're doing this is, of course, inflation. Inflation is running everything crazy. If you live anywhere close to the Western, even not in the Western world, anywhere in the world that you need to use money, you sort of realize that everything is much more expensive than it used to be. So they need to take a drastic action, and many a times, you see, those drastic actions are not well thought out. I was watching a clip this afternoon by the director of IMF. She was sitting in that meeting with Christine Lagarde. I think Christine Lagarde is the head of IMF, and a couple of other very highly senior, powerful women managing monetary policy for Europe. And she made a statement. And that statement is very, very significant, because what she was saying was that when they make monetary policies, and she was making that statement against the backdrop of inflation, she was saying that when monetary policies are being made, that they are being made with the sole objectives in mind and not the unintended consequences. What she was saying was that, yes, there was a pandemic, we had a problem, we needed to address the problem, so we printed more money. But in that same statement, she was considering that we weren't thinking about the unintended consequences of printing more money at the time. We just wanted to solve the problem. And, it's funny because when I heard it, it sort of validated everything I've always said here to say, politicians or technocrats will always look for short-term fixes to solve a problem. And as long as those short-term fixes work, they prefer to solve that problem. It's just like somebody that has a type 2 diabetes. Before now, he was saying it was incurable. And anytime the person has, they tell him, take insulin, take your drugs. That was helping the person's body to adjust to that unusual circumstance. But in the real sense of it, it wasn't solving the problem. The same thing with, antihypertensives, for instance. They don't take away the underlying pathology. They just find a way to create a solution for the problem. So what they have done with monetary policy is an attempt to solve a problem with another problem, essentially. So what has happened now is there's a lot of money in circulation. Inflation is going through the roof. You can't pull the brakes too hard, because if you pull the brakes too hard, then you force economies into recession. So when you force economies into recession, you trigger a vicious cycle. So what I think is going to happen is we're going to have this stop and starts. Yeah, stop and starts the best one. We're going to have this stop and starts in federal banks policies all over the world, within which they pull up the interest rates. When it looks like there's about to be recession, they will wind down and start printing more money. But the problem is not going away. And what that woman said, the director of IMF, what she said today confirmed everything I've always said about it, that this problem is not going to go away because no human being can single-handedly solve this problem. No single nation can solve this problem, because what it will mean is that most countries and people will go broke. Because if you're saying that we need to rebase the global economy and rebase it on something that has limited supply, of course, the people who have the current power structure in their hands are never going to agree to such things. Regardless of how faulty and how decadent the system is, they're not going to agree. And it's important to note, like I mentioned during the London Crypto Summit, that most of the wars that have been fought, major wars that have been fought in the world, have been fought because of change in power dynamics. So for history buffs, most of the, what do they call it now? The campaigns and the crusades. Yes, the crusades. That's the British were carrying out then. They called it crusade. It was war, of course. But most of the crusade were based on the fact that the printing press was making education freely available. That was why people went to those wars in those days, because of the democratization of knowledge. So now we're entering a phase of democratization of money. So I'm not surprised that there are wars, because power will change hands. Power dynamics must shift. And, it's very easy to get caught up in the day-to-day activities of the changes in price. I understand that. I'm a trader in my side also. So I understand that you can get caught up in the price action and forget the context, because the price action is like a laser light to a puppy or a cat. As long as the laser light keeps moving, the puppy's head will keep moving. So the price action is like that to everybody. It keeps everybody's eyes fixated on the price action. But what you're not seeing is what's going on in the overall scheme of things. I was having a discussion with my daughters yesterday, and they were asking me about money and crypto. And I was trying to explain to them that you're better off to learn now, because in your days, you will not have money the way it is again, because everything will be completely digitalized. And I could see that they couldn't sort of phantom, why do we need to do it? What's the big deal? But I'm looking at it and I'm thinking, oh my God, if somebody, told me this, or if I just knew these things 10 years ago, I will have probably be somewhere else now. So it's important that we don't get our head too stuck in the price. And we're wondering, oh, Bitcoin has dropped again to 36,000. Oh, it's dropped to 40K. Oh, it's gone to 45. Oh, it's going to the moon. That's not the problem. And I'm going to talk about the Bitcoin assessment in the next slide. But it's important that we keep our eyes on the overall picture. In whatever is happening now, it's important that we keep our eyes on the overall picture. In terms of regulation, 2 things came out today. In fact, 3 things actually. One was that Ukraine Central Bank banned people from buying crypto with their local currency. I understand why that is, because they've taken over $100 million in crypto donations for the war effort. So there is every tendency, given that there is martial law and things are not going on normally, there's almost invariably every tendency for people to jettison their currency. And I think it's not a smart idea. Like, federal bankers they're very smart, dumb people, unfortunately. But I don't think it's a smart idea for them. But I don't want to discuss that, because Ukraine's at war, so many things are going on, people are dying. It's not, I don't think it's a smart thing, but I'll move further away from that. But the other news that shook the market was the Fed's insistence that they were going to 0.5 basis point. Now, in the minds of the market, the way it's read is, okay, Fed has done 0.25 in Q1. They want to do 0.5 in Q2. What is the guarantee that they won't do 1% in Q3? Because they are ready to continue this interest rate hike until the market sort of calms down and the inflation sort of levels out, forgetting that the original problem was increasing the supply. It was increasing the supply, the overall supply of the dollar or whatever currency they were issuing out. So it's important to keep that in mind, because at the end of the day, when the market starts to recover, people will be like, oh, I wish I bought at that time. I wish I bought at that time. This is that time that you'll be talking about in 2 years' time. I'm going to rephrase that. In 2 years' time, when we'll be talking about, oh, I remember that time when Bitcoin was below 40K. This is that time now that will be talked about in 2 years' time. If you keep your eye on the day-to-day price variation and fluctuation, you're going to get confused and disenfranchised and sad and despondent, depressed, excited. Just the same way the price is fluctuating up and down on the charts. That's the way your emotions will be. And I understand that, you put your money into it expecting quick money, like our Nigerian people, expecting quick returns. But a number of things have changed. Actually, a significant amount of things have changed in terms of the market dynamics. One is that this has now become full-fledged institutional grade assets. What that means is that it's now being traded as a global commodity. Secondly, it's also being looked at as a tech stock. Let me use that word. In the eye of the market, it's almost like a tech index stock of some sort. That's how Bitcoin is being viewed. And as long as that is in place, you will have the same kind of behavior that you're having on price. Of course, when the time for the halving comes, the price will jump abnormally. And everybody like, oh, why did the price jump? But for now, it will look unserious. It will look sometimes go sideways. But when you look at it over the next 2 years, or if I take it from 2021, or you look at it from 2021 to 2024, and you look at the percentage gains that you will have had, then you realize that what we're saying is actually true, because this inflation is not going to stop, meaning the monetary supply, even though they are hiking the rate on one side, the monetary supply is still going on. It's not just going on at the rate at which it used to. Anyways, let's move on to our analysis of the bull run assessments. So 4 things I want to point out in this analysis, and I've started talking about them already. One is that the bull run is aborted right now. What do I mean officially aborted? So the expectation was that we're going to break 48K and then break into the 50s. Now, if you had followed that trajectory, what it would have meant would be that Bitcoin will be back above $1 billion valuation. It means a lot, by the way, because it's going to eat out of gold's current market capitalization. So part of the efforts, and yeah, you can say this is a conspiracy theory, but it adds up to me. Part of the efforts is to ensure that Bitcoin never goes back to 50K quickly, because if it does, attention will immediately move from gold to Bitcoin, sabotaging the gold bug's efforts. Secondly, gold is a much more controllable commodity for the government than Bitcoin. So to control Bitcoin, a number of things are applied. One, the valuation of gold is controlled in terms of how much money is allocated to gold. Two, the stock or the index is also manipulated. So the DXY, the S&P, those are, S&P is stock indices. So once S&P is affected, you can rest assured that you're going to see the effect on Bitcoin in less than 4 hours. What am I saying? 1 hour, 1 hour safe. In 1 hour, you see the effects almost immediately. So 4 things are happening right now. The bull run's been aborted because there's huge sell walls before you get to 50K. And for that to be broken, you need like a $10,000 candle one day. If you see any day that you see a $10,000 candle, any day, forget, the market is going up. The market is going up by at least 50 to 75% from that price. Any day you see that kind of long candle, because it means there's a major market mover, or there's a major market news that's triggered that kind of run. But for now, I think the market will probably go sideways and try to also test the lower levels of liquidity in the mid-30s and above. 2 other things: retail accumulation. So before now, as I think I've said this a number of times before, in previous bull run, when the markets got tired after February of 2018, what was noticed was that there was silence and inactivity on most wallets, most Bitcoin wallets off-chain, not on the exchange, the ones really that are decentralized wallets. What that meant was that people are no longer actively interested in moving their crypto or maybe accumulating more. But that's not the case in this bull run. So in this bull run, we sort of even have a dichotomy of some sort, because on the one hand, accumulation is going on inside Bitcoin wallets on the blockchain. On the other hand, exchange supply, and we're talking about exchange supply since the beginning of 2019. Exchange supply has been going down consistently since 2019. It's not gone back up, consistently going down. So people are buying the crypto and taking them, they're buying the Bitcoin and taking them off the market. Eventually, you will have a scenario that will facilitate what you can call a short squeeze. A short squeeze is what happened to GMT stock last year, that the institutions couldn't sell out. It happened to nickel. The nickel commodity. It happened at the beginning of last month or thereabouts, where the market makers could not exit their position in a loss. So the exchange froze the platform so that nobody could buy or sell. Then rolled back the database of the platform to 3 days before, when their position was in profit. That was absolutely insane. When I read this, I was like, this is the height of insanity. Meanwhile, they are shouting about crypto. This was an exchange in London here on the nickel markets. So understand that accumulation is still going on actively, I must tell you, on the chain. And at some point, something must give. The last statement there is diversion in exchange balances and prices. Something has to give, because exchange balances is not in agreement with what the price is saying. And as long as exchange balances keep going down, the price has to react. The price will not have a choice but to react, maybe violently, but the price will have to react, because if you are reducing supply over and over and over and over and over again, even if the conditions have been managed. After a while, we'll get to a point of no return, and boom, you see that reaction in price. So keep an eye out for that. Many postulation is that we're going to, as I said earlier on, that we're going to 37K. I think it's 36K plus. That's target to the downside target to be. Secondly, a number of people feel that because the war with Ukraine looks like something that is going to drag out for much longer, it's going to affect overall stock indices. And as a result of that, people have already classified Bitcoin as a tech stock of some sorts. It's beginning to affect the overall tech stock in sub-industry, and even the overall, I mean, if you look at S&P, now S&P is going down. So no wonder Bitcoin is going down as well. So on the macroeconomic level, what is pushing the price down are those two major factors. One, the falling prices of tech stock, which Bitcoin is, I don't want to use the word, but it's inappropriately associated with them. Secondly, because Bitcoin is correlated with S&P 500, it's also inversely correlated with the dollar index, which is known as DXY. I'll touch on that during the technical analysis. But you immediately see the effects when those things start to move. And I think we'll be able to tell, not when we reach the bottom, but when the price will start to go up again literally from the dollar index. Because once all these interest rates hike, and when they're going to happen as we price them on the markets, there's nothing else to build the hype on other than to sell. So the idea of buy the rumor, sell the news kicks in, and the price starts to dump. In another news, Stripe. If you don't know Stripe, they're the ones that collect payments on the back end of most e-commerce websites that you buy from. Quite extensive company. I didn't know about them until about 2 years ago. They launched the first product that allows creators on Twitter to get paid using Stripe. So Stripe is a fintech payment company. They connect to your back end on the website. They take the credit card payments. Then they issue the payment to your bank or to your payment method of choice. So for instance, if an artist that collects payments in PayPal, they might connect you directly to PayPal, or they might connect you, take the funds, then post it to PayPal. So big company, but this addition, I think, will also give some boost to Twitter. I mean, you guys were all aware when Elon Musk said he wanted to buy Twitter and give them cash money, like somebody said, like an African man or like an Indian and say, I'm going to give you 40 million cash. So, but of course, there were a lot of not disgruntled, angry investors, co-investors in the bank. I felt that was, in Twitter, that felt it was rubbing it on their face. So they made moves to declining. In another news, actually very good news. Binance, you all know Binance. Binance recovers about almost $59 million worth of stolen tokens. I can't remember the name of that. It starts with R. I can't remember. But basically, there was a heist, a crypto heist last year. And those guys had kept a low profile. They didn't move the money until this week. Immediately, they moved it like this. Finance found out that they had 65 accounts with Binance. So they just captured them. Apparently, they probably had their wallets on high alert. So immediately, funds started moving from the wallet. They were just not being their accounts. So I think it was a very good thing because it shows that truly you can't do anyhow, as they say, and expect to get away with it in the crypto world. So it's a good thing. Again,
this good news for crypto.
Yeah, good news indeed. FTX and Goldman Sachs. Another interesting news that came up this week. So FTX is a new kid on the block in terms of cryptocurrency exchanges, but they've been very popular in the US because the guy is a US guy. It has US connection, venture capital, list, well funded. I mean, fairly good story. And they've also been very successful. They have a good team, obviously. Young guy is 20 something or so. And I heard the guy was saying that they were going to buy Chicago Mercantile Exchange and Goldman Sachs. So because of that, Goldman Sachs said they are looking to partner with FTX to advise them on growth and when they decide to go public. I said, it's that tactics of if you can't beat them, join them. These are the people that have been rubbishing and saying terrible things in times past about cryptocurrencies. Now they want to cozy up with FTX, and they're probably looking to see if they can take up interest or stakes in the company. But I'll be interested in seeing how this pans out, this particular story. Moving on, Australia gets the spot ETF finally this week. It's a very massive step. In other videos, I think probably last year, early this year, late last year, I explained why an ETF is so critical and why it's a big boost for adoption. One, because a spot ETF means you need to settle in Bitcoin. So it creates a demand. And because of that demand, you're going to have a pull on price. So for everybody that is worried about what the price looks like today, it's simple. There's going to be a price bump next week because when they open, so the ETF was approved, they're launching next week. When they launch next week, there's going to be a lot of demand because what it means is that people can buy shares. Let me use that word. That's what ETFs really are. People can buy shares of Bitcoin at a particular price from those brokers, and then those shares are physically backed and settled in Bitcoin. That's what spot ETF is about. This is what US Security and Exchange Commission has been running away from because it doesn't give them control. But like I said before, every time we talked about ETFs, you cannot, the US will not be able to win this war on ETFs because, and let me explain why and why the US and the Security Exchange Commission has been backing off that decision. It's very simple. If you create a spot ETF, it means you need to produce the Bitcoin when the person wants to sell, or when the person needs their ETF. If you have a cash-based ETF, which is what the US uses for the most part, it means you don't really need to worry about the underlying commodity. Just settle in cash. You see, settling in cash means that the real product is in fiat currency, and the fiat currency has infinite supply. So really, you can reverse manipulate the price, which is what I've said all the time, that with futures ETF, the kind of cash settled ETF, you can reverse manipulate the price in such a way that you're pumping the markets with fiat and selling the market short. But with a spot ETF, you're only left with the amount, the Bitcoin that is available, which is what the US doesn't like, because that means they can't manipulate the market the way they want. They've done this for gold for many years, by the way. But gold bugs won't tell you that. But that's how they've run the market of gold. There's enough supply of gold all over the world, by the way. But let's move on. Let's move on to other things. So in terms of fear and greed index, we're a bit better than last week. But I think it's quickly going to go down after this weekend because I think we're taking that dip. We're taking that dip down to 37 or 36, as the case may be. Again, nothing to worry about. If you've not bought your Bitcoin for the month, it might be a good time to buy this weekend, because if that ETF launches next week and they make a lot of noise about it, then the price will pump. Let me wait until to talk about the technical outlook of the price of Bitcoin. I'll wait until when we get to the crypto drip. So in terms of where we are, as I said, I think we've lost our original trailer, and I think we never got to euphoria. I never saw any euphoria chart. I think we've just laid down here to somewhere between capitulation and depression. Many people are angry. I've heard many people say, somebody was telling me that his brother was not angry, was angry with me because he was really banking on, getting that money. I said, the reason I tried as much as possible to explain these things when I'm on these calls is so that people really understand what's going on. So in this particular case, what's happened is the guy took a loan and bought crypto, and crypto is dipping. So I said, what your brother doesn't understand is that he's taking a loan to buy an asset. If he's using his sweat to pay back that loan and his asset is intact, he's going to be a richer person for it. It's just like you're in the UK, you buy property for buy-to-let, you buy 4 properties for buy-to-let, and you're using your salary as a consultant or as a whatever, as a paid employee to settle those debts. What you are doing is you are preserving your assets while you are settling your liabilities in cash. You see, the good thing about that is because of the time value of money, liabilities that you are settling in cash will depreciate along with, the fiat currency. However, your assets will appreciate against the fiat currency. So keep that in mind, please. It's very important. I know that's why, that's part of the reason why people are not showing up on the calls anymore, because everyone's like, oh man, they're just tired. This thing is not going up again. Understand we are still at the very beginning. And I'm by the time the institutions have a full grasp of this, definitely Bitcoin will probably be more expensive than gold by that time. It will be nobody's made, so to say. Well, let me not say more expensive. It's already more expensive than gold. 1 Bitcoin is more expensive than. There was a time 1 Bitcoin was the price of a bar of gold. Now that time has passed. I think what I was trying to say was that the market cap of gold and that of Bitcoin will match and will be exceeded at some point. So understand that, and like one of the techniques that we'll be sharing on our Manchester crypto summit is averaging in, which people know as DCA, so people call it buying the dip, but it's just averaging in, not trying to excessively time the market, such that when you pull together your accruals over a long period of time, you realize that you've actually taken a good chunk of the market when the market was down. And of course, within 6 months after having, you start seeing the price jump, by which time many of the previous all-timers will have been completely left in the dust. So a word is enough for the wise. Let me just put it there. Let's go into technicals quickly so that I can round up. I'm trying as much as possible to shorten this video so that it doesn't become too difficult for people who watch them after. So in terms of our technical analysis, let's talk about correlations. So these correlations are very important because they are the things that are indirectly affecting the direction of price of Bitcoin. And one of those correlations, I know I probably talked about it a long time ago, very long time ago. One of them is what you call the DXY. The DXY is the US dollar index. It's the measure of the strength of the US dollar against a basket of other currency that they are trade partners with, essentially. That's what the DXY is. So the DXY can be said to be sideways to downwards for a while now because it's been making lower highs. Yeah. And it's made a lower low. So the recent high was around, where is that? 103 points. The general feeling is that if this completes and the market does not break forth beyond 103, we'll definitely see a reversal in, number one, the price of Bitcoin, and number two, the volume of the market cap that will change. So like I used to talk about dominance. I think this is one to look out for. This one and SPX. And this one, until we see a sign of reversal, which is not really in place, is it? Let me see. We do actually. So this is the weekly chart. We do have what you call a hidden divergence on the weekly chart, meaning the oscillator is pointing straight, the price is going up. So there's a disagreement. Anytime there's a disagreement, people have to part ways. If you remember that you time your entry better than anybody, anytime there's a disagreement, people tend to part ways. So for instance, the reason I know that this Bitcoin dip is not going to last long is just looking at these charts. For instance, we can see here that the oscillator relative strength is going down. Meanwhile, the price is going up, meaning there's disagreement. This disagreement must end in separation or end in going in the same direction. Most of the time, it's like things are going to change because the market always changes direction right about when this happens. So I expect that we'll start to see a change in direction. And I'm thinking it might have happened on the shorter time frame, actually. Yeah. It's hidden. It's hidden on the shorter time frame. So on the shorter time frame, you can see the price make obvious higher high. But here is almost like the same level. But it's a lower high, slightly lower high. So it's quite hidden. This is kind of divergence that's called hidden divergence. It's not so overt. This is sign that, especially from next week, we might see some correction in the price of Bitcoin because this automatically affects this, which is S&P 500. Standard & Poor 500 index is an index that is traded on CME and other US commodity exchanges. And what it measures is, the strength and the health of the top 500 companies in the United States. I mean, it's a given that probably the top 50 or 80 are the ones that run things. But yeah, that's the measurement of the strength of US economy in a way. So as long as S&P is going down, just watch the price of Bitcoin. So you can see the last four, this is, which 4 hours is this one? 6 o'clock, is it? Yeah, interesting. So the one at 6 o'clock, if you check the price of Bitcoin at 6 o'clock, was definitely down. So that was a 12-hour. I'm coming to that 12-hour. I saw something interesting there. So 6 o'clock. So it was definitely down. So you can see in the same vein that S&P has been down, Bitcoin is down. As long as S&P is down, Bitcoin is down, because in the mind of those institutional investors, Bitcoin is technology, which is true, which I mean is much more than technology. But in their mind, it's like a talk stack. So they just treat it like talk stack. And because institutions are way more involved than retail now, that price is not going to reflect the true state of things. Anyways, let me go to my daily charts to complete this top-down analysis of the price of Bitcoin, then we can call it a day. So let's start from our weekly charts. On our weekly charts, we saw that McDonald's M sign, which everybody says is going to bring us back, which everybody says is going to bring us back to 10,000. So people say it's going to drop us back to 29,000, because usually when you have a structure like that on a high time frame, chances are that structure is going to play out to the bottom length. So we use something called measured move. Because this is not a perfect double top, I won't take it serious, but I will take this serious as a double top, or sorry, a head and shoulder. So this is the head, this is right shoulder, left shoulder. Usually what is done is measure from top to bottom of how the structure is formed. So the structure is formed along this axis. So from there, you can project that wherever the market is, whether it's here or here, it's eventually going to find its way here, which is 2928K. Theoretically, it looks possible, but practically, you need more terrible stuff to happen this year to change to make it even remotely possible. Because, as I said, on-chain activity is so high, and retail accumulation is going on like a mad. People are buying. So imagine next week now, they will open the floor for them in Australia, and they start buying as well. So really, on the weekly charts, we've definitely bottomed out, because this was the peak bottom at the beginning of this year, 32K. This was the bottom of last year, 29K. If we switch to the daily charts, that's our ascending triangle. Even though it was broken up here, it's broken back down. And it now looks like a channel. So it looks like a channel is when price is ranging up or down within a particular band. So it's ranging up and down on this band, but it was going up before now until it's broken out of that channel. It has various implications, by the way, breaking out of this channel. It can break out to go and test the fib level at 34, 35, or this small trend line that just joined the party. It can go and join, it can go and touch this trend line and come back, which is 37K, which is in line with what most people think that the stuff will be 37.5K. Personally, I'll wait for it to touch 36 plus or 37 at the minimum, because that's, even right now, the edge of the Bollinger at the lower end is at 36. Is it 36? 37, 638. So I'll be more comfortable if it touches, or when it touches it, that this Bollinger Band is already sitting on this trend line. If that happens, then we're going to definitely have a bounce. Definitely. How soon is it going to be? I mean, a couple of days to a few weeks. In terms of intraday, for people who are intraday traders, it's a bit technical. What we see is a structure that is pointing downward. Let me use this to annotate what I'm talking to you about. I wish I knew about wave structure way back. That made my life easy. So, wave structure. So we've got that and that. So some people believe that this is what has happened, and this is a move upward in which they're expecting the price to go up, correct, and push upward. I am expecting the price to. So that's not the way I have plotted it. The way I plotted it is, let me choose ABC. No, not that ABC. That if this was our recent high, which was at 44K, not even going to 48, can you imagine? If it was our recent high, agreed, then we can say this was the first move, this was the second move, so the third move, fourth, and then we can expect that this is going to come deeper, because it has tried to go up and it is making deeper impressions into the downside. So that's what it looks like, the price of Bitcoin. Ethereum is not so different. It's also dragging itself down. And SPX is one to definitely, if you have trading view and you want to know when to enter, just look at SPX. If SPX is down, it means it's going at a discount. So right now, it's almost down to 29. I think the band around there is 30. So once it drops below 30, it's time to start buying. I know it's not in our program to buy when things are not making sense. So take it easy on yourself. If there are no questions, I think I'm done in terms of the analysis for today. Again, next week, is it next week now? Upper week, actually. It's beginning to feel like next week. The 2nd of May will be Manchester, spreading the gospel of crypto and making disciples of as many as we want to. You can register. I think the link is on my bio on Instagram. You can register online for free ticket. The free online ticket is very limited because I need to admit VIP online as well. So if you're interested, please grab your copy now. Thank you very much, everyone. Let me have your questions if you do have any. Shout out to all the people on Instagram. See a lot of people on Instagram today. Shout out to you all. Okay. So I think I can stop the live recording then. If